Hello and welcome to Dukascopy TV. Joining me now to discuss the latest development in the European debt crisis, including a deal reached on Greek debt sustainability, is senior economist Carsten Brzeski at ING in Brussels. Carsten, great to have you back on Dukascopy TV. Now to start, let's start by discussing Greece, as the Eurozone finance ministers and the IMF finally reached an agreement on reducing Greek debt. First of all, Carsten, what do you make of the deal? And second of all, surely the key question remains as to whether Greek debt can become sustainable without Eurozone governments having to write off some of the loans later down the road.
The meeting produced kind of the typical European fudge. It showed that the political will is clearly there. It also put that politicians are willing to put their money where their mouth is. So Greece will receive financing. Greece will stay in the Eurozone. But at the same time, really this big issue of really restoring debt sustainability has been delayed again. So I think that still, if you look further down the road, that some kind of more explicit debt forgiveness will still happen, because with the measures decided last night, I don't think that Greek debt will really return to a sustainable level.
What about the divide that has emerged in the Eurozone between northern creditors and southern debtors? And also, we're also starting to see a growing divergence in views and solutions between the IMF and EU leaders over debt sustainability. If this continues, how is it going to affect future negotiations and deals?
I think this divergence between, let's say, northern and southern Eurozone countries, this actually has been narrowed over the last couple of weeks, especially with the change of the German stance in the Greek crisis, with Germany really showing its commitment to keep the Eurozone together. I think that this has been a clear game changer. This divergence between the IMF and the other Eurozone countries, I think that is a more significant one. With the latest Eurogroup decision, I think that they found a fudge. They found a compromise, now claiming that they will do everything they can to ensure that the Greek debt will return to, quote, substantially lower level of 110% of GDP by 2022. So here I think the Eurozone leaders wanted to be a bit more flexible, and the IMF also showed some kind of flexibility. But to be honest, I don't think that this divergence between the IMF and the Eurozone has really been solved. It might come back in a couple of months.
While current yields are lower in these troubled economies, are long-term rate levels sustainable for Italy, Spain and Portugal?
I think if you look at Italy and Spain, they are at a almost sustainable level right now. Still, I think we should be careful to be too complacent, because we've seen in the past that we don't need a lot to see these levels again increase. And that is the big issue. In the current state, I think Italy and Spain and Portugal are fine and could live with these levels of interest rates.
On the discussion of relevant risk factors on financial markets, once policy uncertainty is lifted on Greece and Spain, what about volatility in the run-up to the elections in Italy and Germany?
I think if you look at Italy, Italy has done a rather good job over the last year, kind of stabilizing the economy, actually being off of financial markets radar screens. I don't think that in the run-up of the election that we would see lots of volatility. Same holds for the German elections. If anything, the upcoming German elections next year will probably push Mrs. Merkel towards a more pro-European stance. I think this is already something that we have been seeing happening over the last couple of months. So really to expect volatility in financial markets due to Italian and German elections is not something that we do see.
Do you believe the Eurozone will only suffer a mild recession, or do you think the Eurozone could slip into a deeper recession in 2013?
If you already look at the current recession, this I think is not really a mild recession, especially if you look to the southern European countries. It is a severe recession. We do expect that the Eurozone will stay in recession again in the fourth quarter of this year, and will only, let's say, gradually get out of the recession in the course of 2013. The big thing here will again be economic divergence, where let's say the recession will probably remain severe in most southern European countries, while core countries, above all the German economy, will probably get out of any economic contraction rather quickly.
European investors also have their eyes fixed on Spain following the Catalan regional election results, where Catalonian voters in Spain backed pro-independence parties. In your opinion, Carsten, what does this mean for Spain and perhaps even the rest of Europe?
It's a very tricky one. I think it is a tendency that we indeed see also in other countries, that there are people being afraid of this big European monster because it's very hard for them to get a feeling, to get emotional about Europe. So therefore people try to flee into more nationalistic or even regionalistic approaches. I think here really the challenge for every country is to accept variety, to accept differences, but also to explain and to make clear that really economic islands within Europe would not be able to survive. So that really the future even of regions is within Europe, and that separation, at least in economic terms, does not make sense.
Where now with the EU budget negotiations? As the EU budget talks ended without a deal, are you confident a deal will be reached at the next summit early next year?
Probably, because the experience of the last years tells us that really the pressure needs to be very high in Europe to get a deal on these very tricky and very controversial issues. The EU budget is such a controversial issue, but I'm really positive that we will get a deal. It would also show the outside world that Europe can get its act together, and that Europe does not end up in disagreement on a rather smaller issue, because I think it would be good to send out a signal that, given all these bigger projects like further Eurozone integration, that European integration and cooperation does not end with the EU budget.
What about the rising social unrest within Europe as the debt crisis continues? How can governments perhaps recover some support to restore consumer confidence and boost output?
In the short run, this is a very tricky one. I think what we do already see now, what is happening, is that the countries get a bit more time to implement the reforms, so that it is not an entire shock therapy. This should help. The best thing that can really happen is that we hopefully do see the first positive results of the structural reforms.
Thank you very much, Carsten, for your comments. I'm afraid that's all we have time for at the moment, but stay tuned to Dukascopy TV for more exclusive interviews. For the moment though, goodbye.